Here's what the April data is telling us that most people are not paying attention to. Buyers have significantly fewer options because fewer and fewer home sellers are actually interested or are coming to the market. Competition is increasing and home prices have been consistent for the last 6 months. All this and more covered in this week's San Diego Market Matters. And I'm Karl Kyler, your San Diego Realtor. Now, if you haven't liked and subscribed to the channel yet, here's your opportunity to do it now, or you can wait till later if that's a better fit for you. Either way, thanks for showing up. Now, let's dig into this data. Let's start where every market story starts, with new listings. These are all the homes that came to market in the month of April. Every new listing that hit the San Diego MLS county-wide. This metric tells us how many sellers decided it was time to make a move. And in April, a lot of them decided to stay put. On the detached side, these are your single family homes. We saw 1,994 new listings in April of this year compared to 2,340 in April of last year. That is a year-over-year drop of 14.8%. But the number behind that number is where it gets more significant. This is the 6th consecutive month that detached new listings have declined year over year. November, December, January, February, March, and now April. 6 straight months of fewer sellers than the year before. Now, year-to-date detached listings are down 11.7%. So why aren't sellers moving? Well, we could probably attribute this to the lock-in effect and it hitting the detached side of the market the hardest. Homeowners who bought before 2022, when rates were 4% or lower, are sitting in larger homes that have grown around them. In a lot of cases, they have room to do add-ons, room to grow into the home, and a mortgage payment they're not about to trade for one at 6.5% on a bigger home at a higher price. If they outgrow it, an addition is cheaper than selling and buying up, so they just don't list. And when detached sellers don't list, the move-up market goes with them because those are the same people who would typically use their equity to buy the next home. That pool of buyers is thinning out as well. Next, on the attached side, these are your condos and townhomes. New listings came in at 1,327, down 4.7% year over year. And here is the notable detail. This is the first year over year decline in the attached new listings after many consecutive months of running up above prior year levels. Throughout 2025, attached listings were climbing. That trend flipped in April. Year to year date, attached is still slightly positive at 1.5%, but the directional change this month is worth watching. Combined across the county, 3,321 new listings hit the market in April, down 11% from 3,732 we saw a year ago. This is where the supply story for April begins, and it does not get more generous from here. Now, let's see how buyers are responding to it. The pending sale data is the demand signal in this report. A pending sale is a home where an offer was accepted and the property went into escrow. This is the most real-time read on what buyers are doing, not what they feel, not what some survey says, but what they are actually doing with real money in front of a real contract. And in April, buyers are moving. On the detached side, pending sales came in at 1,399, up 6.7% year over year. This is the 5th consecutive month that detached pendings have posted a positive year over year reading. December now through April, 5 straight months of buyers showing up, writing offers while rates still sit in the mid 6% range. Now, year to date, detached pendings are up 2.8% as well. Here is the number that puts the full circle in focus. 1,192 new detached listings came to market. 1,399 went pending. That's a 70% absorption rate. Roughly 7 out of every 10 homes that hit the market had an offer accepted. In a spring market with rates in the 6s and affordability stretched to its limit, that is not a soft market. That's a very, very constrained one. Now, on the attached side, pending sales jumped to 800, up 13.8% year over year. That is the strongest demand number in this entire report. And for 4 consecutive months now, January through April, attached pendings growth has outperformed the detached side of the market. Buyers are finding entry points at the condo and townhome level and taking them. At a median price of roughly $680,000, attached is the accessible tier for the significant portion of the San Diego buyers who are priced out of a detached home. The demand is there. Year to date, attached pendings are up 8%. Now, there's two things in the pending data that is sending a very clear message to us. One, people are not in a hurry to sell. And number two, buyers are not walking away from this market. Both things are true at the same time. Now, let's look at what made it to the finish line. Next, we have closed sales. These are the transactions that made it all the way to the closing table, and this is a lagging indicator. These are deals that were negotiated weeks before April and now finishing the race. Now, keep that framing in mind as we look at these numbers. Detached closed sales came in at 1,386, down 3.5% year over year from 1,437 last April. Year to date, detached closings are essentially flat, down 0.3%. The monthly dip is real, but the annual pace is still holding. Now, here's a detail we're sitting with. In March, 1,405 detached homes went pending. In April, 1,386 detached homes closed. That's a close rate of about 98 to 99%. Not every March pending closes in April. Some will spill into May, but at face value, the number of homes that went into contract in March is almost identical to the ones that closed the following month. Deals are getting into escrow and they're staying there. This is a low cancellation environment, and it tells you buyer commitment is strong once they decide to move. On the attached side, we had 756 closings coming in, down 1.6% year over year. And then year to date, attached closings are up 1.1%. So one slightly softer month on the calendar that's still ahead of last year's pace. The broader story on closings is cause and effect. When new listings decline for 6 straight months, the pipeline of homes available to eventually close shrinks with it. We are starting to see that show up here. This will continue if new listing volume does not recover and start to grow soon. Now, here's where it gets interesting, because the median sales price data is exactly where the comment section shows up the strongest with opinions. Median sales price is the midpoint of all closed sales. Half the homes sold above, the other half sold below it. It is a directional read on the market. It is not a statement about what your specific property is worth. And the directional read from April is this: prices are holding. Detached median sales price came in at $1,100,000 in April, up 2.3% from $1,075,000 that we saw a year ago. In dollar terms, that's about $25,000 more in value on the median detached home compared to 12 months ago. And here is the context that matters most. This is the 6th consecutive month of positive year over year median price growth on the detached side, November now through April. The trailing 12-month average rate is still sitting at 1%. One of the most common things I see in the comments is the argument that prices are coming down. In specific areas, that's totally valid. And you will find prices where negotiation brought that price down. Sellers who listed at a number that reflected what they needed to move and not what the market would pay. That happens. But when you average it across the entire county of San Diego, the data shows modest, consistent, positive growth. 1 or 2% is not a runaway market. It is stability. And right now, stability is the ideal outcome for this county. Prices holding while wages have a chance to catch up, which is what we'll cover in this analysis shortly. Moving on to the attached side, the April median came in at $680,000, up 1.5% year over year. The nuance here is significant. For several consecutive months leading into April, January through March, attached median prices were running negative year over year. April flipped back to positive. Now, year to date, attached is still at negative 2.4%. So one positive month does not change the trend yet, but it is a signal that the attached pricing may be hitting its floor after a period of softness here. 2 segments, same county, 2 different price stories this month. Now let's talk about the metric that is the most relevant to anyone currently in negotiation. The percent of original list price received tells us, on average, how close to asking price sellers are getting. Detached homes received 98.9% of asking price in April, essentially unchanged year over year. Attached came in at 97.9%, down 0.6%. Here's what this means. Yes, sellers are accepting offers below asking price. That is very real. But when you average it across the entire county, we are talking about roughly 1 to 2% below list. That is not a correction. That's just a negotiation. If this number were sitting at 95% or lower, that would signal meaningful price declines across the board. We're not there yet though. The range we're in, consistently 97 to 99% for months, describes a stable pricing environment where sellers have leverage, but buyers still have a little room. Anything above 100% means bidding wars. Anything below 95%, the sellers are hurting. Right now, we're sitting right in between, a very stable space. That is balance, not a buyer's market. Moving on, days on market tells us the average number of days between when a property is listed and when an offer is accepted. It's one of the first metrics we use to determine which direction a market is moving, towards buyers or towards sellers. And in April, it gives us what might be the most interesting data point in this entire report. Detached homes averaged 35 days on market, up 9.4% from 32 days a year ago. Attached homes averaged 41 days, up 24.2% from 33 days last April. Both segments are sitting on the market longer than they were a year ago. Year to date, detached is running about 39 days versus 36 as per last year, and attached is running 46 versus 40. Here is the anomaly in this piece of data. In a typical market, when days on market rises, you'll also see inventory rising and prices softening. That is a typical pattern. But in April, days on market is rising while inventory is falling and prices are growing. Those three do not usually move together, which tells you this is not a typical signal. What is more likely happening is a seller behavior story here. The sellers who are listing in this environment are not distressed. They're not forced sellers. Many of them are just testing the ceiling. They're pricing where they need to be to justify a move and then waiting to see if the market's going to give it to them. Correctly priced homes are still moving quickly. The ones sitting longer are often aspirationally priced listings, still trying to find their number. And look, if you listed your home at 10% over the market in San Diego right now, you'd sit longer as well. It's not a buyer problem, it's a pricing dilemma. Now let's talk about supply, because this is the metric that ties every other section together. Active inventory is the total number of homes available for purchase at the end of the month. Think of it as a shelf. New listings are what gets added each month. Active inventory is what remains on it at the end of the month. In April, detached active inventory stood at 2,838 homes, down 22.4% from 3,658 that we had in April of last year. That is more than 800 homes removed from the available detached supply in over 12 months. And the rate of this decline has been accelerating. January was down 7.7%, February down 12.5%, March down 15.4%. April is now down 22.4%. Each month, the gap widens. Each month, the floor drops further. Months of supply tells us how long it would take to sell every home on the market if no new listings came in and sales continued at the current pace. Detached came in at 2.3 months, and that's down 23.3% from last year. And here's the longer trend. Detached month of supply has not grown year over year in nearly 6 months. November, December came in flat. January through April all printed negative. April's 23.3% decline is the largest of the entire run. At 2.3 months, we are deep in seller market territory. Now, a balanced market typically sits at 4 to 6 months of market time. We're not close to a balanced market on the detached side yet. On the attached side, active inventory is 2,554 homes, up 1.1% year over year, which looks flat, but the trajectory is the story here. A year ago, attached inventory was running 100% above the prior year level. That year over year growth has been compressing every single month. 88% in May, 69% in June, down through the fall and winter, and now we are at plus 1.1%. The inventory pipeline has stopped filling. The supply build of 2025 is clearly over. Attached months of supply came in at 3.6 months, down 2.7% year over year. This is the first year over year decline in attached month of supply after more than 12 consecutive months of increases. At 3.6 months, attached is closer to a balanced market than the detached side. And that directly explains why attached buyers have slightly more time, slightly more room to negotiate, and a larger or longer average days on market. It's a supply difference, not a demand difference necessarily. We showed you attached pendings were up 13.8%, so don't misunderstand that there. More supply means more choice means less urgency, and if the attached supply trend continues to compress the way the detached did before it, that window of breathing room for buyers is going to narrow. Now let's zoom out and look at the complete county-wide picture. Detached plus attached combined. 3,321 total new listings in April, down 11% year over year. Then we had 2,142 closed homes, down 2.9% year over year. And year to date, that's 7,170 closings, up 0.2%, essentially flat on the year. Blended countywide median sales price, $925,500, up 1.7% year over year, and up 0.6% at $905,000 year to date. Total active inventory is 5,392 homes, down 12.8% year over year. Total months of supply, 2.8 months, down 12.5%. List price received countywide, 98.5%. And days on market are 37%, up 12.1%. The simple version of April's total picture: fewer homes coming to market, more buyers competing over what is available, prices holding with modest growth, and inventory contracting. That is not the picture of a market moving towards a correction. That's a market getting tighter and sustaining at the very least. And if we bring this all together and talk about what this means, the metrics that look like softening, closed sales slightly down, days on market rising, new listings declining, all track back to one thing: sellers are not moving. And when sellers hold their inventory in a market where buyers are still showing up, the system is going to compress. That is April in one sentence. The macro backdrop is not changing that anytime soon. Rates are holding in the mid sixes. The Fed has limited room to cut with PCE inflation at 3.5%. And the incoming Fed chair creates uncertainty that does not push anyone off the sidelines. The most encouraging data point in this entire report actually came from outside of the MLS. ATTOM's Q1 2026 home affordability report put San Diego among the most populous counties in the entire country, where wages outpaced home price growth year over year. Wages are up 3.9%, while home prices are down 1.7% over the same period. We're still in a county where homeownership costs 65.7% of the average wage, so affordability is not solved, but the gap is closing in the right direction, slowly and sustainably, which is exactly what this market needs. If you're a buyer, your best leverage is on the attached side: longer days, more room to negotiate, and months of supply still above the detached level. On the detached side at 2.3 months, you need to be ready to move. If you're a seller, 6 straight months of declining new listings and 22% drop in inventory are working in your favor. Price your home right and it will move. And that's a wrap for this week's San Diego Market Matters. And if you're looking to buy or sell here in San Diego, my contact info is in the description below. I'd love the opportunity to work with you. Be sure to like and subscribe if you haven't already. As always, I'm Karl, your San Diego realtor. I'll see you in the next video.